profit planning process centers on the preparation of pro forma income statement. A pro forma financial statement is a financial statement projected over some future time period. These pro forma statements can be analyzed using ratio analysis to anticipate and assess potential problems and areas of weakness, and thus help management to formulate contingency plans. Percentage of sales forecasting technique. This method first forecasts sales and then express the cost of goods sold and other expenses as a percentage of projected sales. The percentages used are those in the previous year. The key assumption of this method is that all costs are variable and vary proportionally with sales. Limitation is that it assumes no fixed cost, which is unrealistic. In addition, variable costs may not vary in direct proportion to sales in the real world. Dinosaur Company. We'll use Dinosaur Company's financial statements. Assume we are in July 20x7. Required to prepare the statements for the coming June 20x8. This is next year, the future period. Income statement for Dinosaur Company for the year ended June 20x7. This is the actual income statement, not a forecast. Balance sheet for Dinosaur Company as at 30th June 20x7. The sales forecast for next year, June 20x8, is 684K. Dinosaur Company intends to pay a dividend of 36K to shareholders in the year ending June 20x8 next year. Pro forma income statement for Dinosaur Company for the year ending June 20x8. Take note, this 20x8 is next year, a future period. The question states, sales forecast for the year ending June 20x8 is 684,000. So the sales revenue will be 684K. From the table, we can see cost of goods sold and sales revenue for this year. Let us find the percentage of cost of goods sold equal cost of goods sold divided by sales revenue. Let's use this year figures. 456K divided by 570K gives you 80%. Let us use the 80% to find the cost of goods sold for next year. 80% times sales revenue of next year, 20x8. So it's 80% times 684,000 gives you 547,200. $684K minus 547.2K gives you gross profit of 136.8K. From the table, we can see operating expenses and sales revenue for this year. Let us find the percentage of operating expenses equal to operating expenses divided by sales revenue. Use this year figure 45.6K divided by 570K gives you 8%. We'll use this 8% to find the operating expenses for next year. So 80% times sales revenue of next year is 80% times 684K gives you 54720. $136,800 minus 54720 gives you the operating profits 82080. We assume that the interest expense is fixed and the same as 20x7. 82080 minus 11400 gives you net profits before taxes 70680. %, times 70680, which is the net profits before taxes, gives you the taxes of 12722. 70680 minus 12722 gives you the net profits after tax 57958. The question states, Dinosaur Company intends to pay a dividend of 36,000 to shareholders in the year ending June 20x8. So you have a less common stock dividends minus 36,000. 57958 minus 36,000 gives you the retained earnings at 21958. Let us remove the working. Please spend a moment to look at the answer.